Okay, welcome back to the channel, my God Chain. Thanks for tuning into another video. Today's video is going to be a Bitcoin update. We're going to take a look at Bitcoin and the chart, talking about the long term and the short term, and also talking about trigger points. The main topic of today's video is, are we out of the woods? Are we officially bullish? That's the main question. And I'm going to be answering that question throughout the video, so stick around to the end if you want to find out. Before we get into it, remember like, comment, and subscribe. Follow us on Twitter and Telegram. Links in the description for those, and if you're interested in VIP coaching, the link is in the description to contact. Let's dive right in. So first and foremost, I did want to point out we are in fact over all our moving averages besides the 200. Now the 200 is the defining moving average, and well known for crypto traders that, or just traders in general, that when the price is above the 200-day moving average, you are in a macro uptrend. When the price is below the 200-day moving average, you are in a macro downtrend. And that 200-day moving average is starting to line up exactly with this major resistance zone of 47,000 to 48,000. Now that is no surprise. In fact, the 47,000 to 48,000 is that exact range that we do need to flip to become bullish. And I'll say it again, we need to get above $48,000, just $47,000, this range here, to become bullish again on Bitcoin. If the price continues over that range, it will definitely continue upwards, or most definitely continue upwards. Before we get back to that range, we do have a little bit of resistance. We have this red zone over here. Now these two horizontal lines are indicating two separate resistance levels, which have been acting as a major resistance and support in the past for Bitcoin. We can take a look at the upper line, which is sitting around 45,700, acting as a lot of support for Bitcoin and a lot of resistance in the last few months. In fact, this year, even going back to December, even going back further, we can see this area has acted as resistance and support for Bitcoin. And once again, we've found ourselves underneath this range. And we can see that during this range, particularly in the last year or so, we'll see a lot of long wicks around this range. We can see here, we can see here, 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 and even down over here. We can tell this range is a area of massive resistance or massive support. All right, so flipping this range will inevitably lead us up into this higher resistance range. And I would like to say that this red zone here is a stronger resistance than this upper resistance zone, which I'm going to circle again, which is over here. So if we are able to flip this red resistance, there's a very high chance that we continue up into this zone. From here, I believe we may get rejected, but a strong resistance becomes a strong support, and we flip it and continue into a new macro uptrend. That is the bullish scenario, all right? So are you bullish now? No. Should you be bullish now? No. I've been saying for weeks, cautiously optimistic, all right? Cautiously optimistic. We're not bearish, we're not bullish. We are waiting for the charts to play out. We're gonna analyze, keep up to date, and we're going to act based on it. Does not mean we're not trading. We are definitely capitalizing on the recent moves. We're definitely trading. We are just not overall bullish yet. So taking a look at the bearish scenario, I'm going to get rid of that line, and we're going to look at this. All right, and this in fact is what you call a rising channel or an ascending channel. And an ascending channel is a bearish formation. It's when you have two rising trend lines. Two ascending trend lines, where the price enters those trend lines from the top side, it usually bounces around with at least 3 tests and then falls to the bottom side. And the distance we can measure our move from is the top of the flagpole to the base of the first touch of the bottom support. So we can measure this move on this trade, and I'll give you an example of where the measured move would be from. It'd be from the top of the flagpole down to the base over here, and we can apply that as an extension, and we can say that our target for that, if it did break down, would be about $27,000. And it's definitely a likely scenario and definitely possible, and I definitely keep an eye out. So if we lose this level here, remember guys, we're not only losing an ascending trend line over here, we're also losing the long-term trend line on the log scale. All right, that $35,000 trend line. Remember that trend line we did in a few videos back, that we drew across the base of support from basically the inception of Bitcoin all the way through the 2014, 2017 bear market, bull market, and basically indicated the bottom for every single bull market. So if we lose that trend line, we're losing a very critical trend line on Bitcoin and the log scale, which is very, very dangerous for cryptocurrency and Bitcoin in general. So we said this a while ago, and we said it was going to act as a massive support, and we found two massive, pumps from that trend line, and we could see a third retest. But I don't believe if we see a third retest, we will hold it. I think we will fall down. Keep an eye on that, guys. And obviously, confirmation for this to be retested is if we lose this level here. We lose this level, the price continues down to that level. Until then, guys, cautiously optimistic, waiting for these zones to break. We break this zone, I will be entering because I expect to move upwards here. We break this zone, obviously we are into a macro bull run again. Everything's good, chart's looking good. We continue upwards. All right, let's take a little look at the technicals. And we're going to move out to the 7-day again for the bull market support band. And as you can see, Bitcoin's price is over the bull market support band on the 7-day, which is very, very bullish. Obviously a great thing to see, and another bit of supporting evidence that we will push upwards here and continue upwards. Again, I would love to see a crossover of that bull market support band, price continues into this range, comes down, retests that support band and continue up. Similar to what we saw over here, pretty much the same move. All right, we come up to this gray box, we maybe get a candle above, we maybe mess around on it a little bit, we come back down, retest that bull market support band, and then we go into a nice strong move upwards. I would love to see something like that. That'd be ideal for Bitcoin at the moment. We are still in a neutral consolidation, and I like to say anything between these, I'm going to zoom out again, anything between these two gray lines, you need to be cautious. All right, anything between these two lines, you need to be cautious and prepared for both bullish and bearish scenarios. All right, prepared, aware and prepared. Above this gray line, we can be very, very bullish. Below this gray line, we can be very, very bearish. But between, guys, be neutral, be cautious, be aware of both scenarios so that if it actually plays out, if one scenario plays out, we know how to act, we know how to respond to that scenario. And I'm going to give you some examples on how to take these trades. Say, for example, the price continues up, we enter above, we put our stop loss below, we have our target basically to the next major resistance, which could be anywhere between 54,000, which will be the next major one, and then we can even take it a little bit higher to about 60,000, and that will be our bullish trade setup. Our bearish trade setup, of course, we will enter below this trend line, below this area of support for Bitcoin. Let's go to the short position, and we put our stop loss above this trend line again, and obviously our target profit will be down to around what was it, $27,000-ish. All right, so we've got very favorable risk reward ratios, very, very profitable trades for both bullish and bearish scenarios. Trying to catch a swing, because what you're trying to do if you buy now is you're trying to catch one of these swings. You're either trying to catch a swing high up over here, or you're trying to catch a swing low. But look how early you are entering onto these trades. All right, so think about this. You are buying now in the hopes that we are either going to continue upwards in a macro scale, or that you're shorting now thinking we're going to continue downwards. All right, but until we have these resistance zones, and support zones broken, we have no confirmation of either of those moves occurring. So you're preemptively entering a position on the basis that your assumption is correct. And that's a bit of a risk. That's a 50-50. It's always safer to wait for the data to suggest that your assumption is correct rather than trying to predict and act on a prediction before the data suggests what is actually occurring. All right, guys. So I know that made a bit of a mouthful. Hopefully that made a little bit of sense. It's basically, in essence, just wait for the data to line up with your predictions and then enter the trade, because until it happens, there's no confirmation that you are correct. All right, you can interpret something wrong, you can be mistaken, you could analyze a chart incorrectly, you can forget to analyze certain parts of charts and therefore influence your decisions incorrectly. There's a whole range of things that can occur, but what is always going to be a fact is if the price gets over a resistance, it is over a resistance. All right, that is not a subjective analysis, that is objective fact. And if we trade based on objective realities, you can control your trades at a high degree. All right, less variables, more success, more profits. All right, guys, I hope today's video was beneficial. I wanted to keep it nice and short and sharp. We're going to go into a lot more detail in all of this stuff in tomorrow's video with Wolves of Crypto. The video should be posted around 12 p.m. GMT time, GMT plus 10 time, so Brisbane, Australia time. If you have any questions about today's video, leave them down below. And of course, We'd love to see you in our Telegram and our Twitter, and we'll see you in the next video.